So we are just hours away from the historic face-to-face between President Trump and Kim Jong-un. Then we get the big Fed decision on interest rates on Wednesday, and if that weren't enough, ECB decision on Thursday. There's also the Bank of Japan. So many moving pieces to throw out there, and you've also got concerns about a trade war. So how's it all going to play out in the markets? Let's bring in Margaret Patel, Senior Portfolio Manager with Wells Fargo Asset Management, and Patrick Kaser, Managing Director and Portfolio Manager with Brandywind Global Investment Management. Nice to see you both. Margie, which is the bigger deal for the markets? It doesn't appear that the G7 trade tensions are that worrisome. So is it the North Korean summit or the Fed?
Oh, I think all eyes are going to be on the Fed because that's much more of an important factor for fixed income investors, of course, for levered players. So I think people will take a very close look at what the Fed does, how quickly they're going to aggressively move, especially if inflation numbers look bad.
Patrick, what do you think, especially as it relates to the big banks? Bob said they're so important for leadership. They've been lagging behind another day, and they're not even in the top 3 or 4 best performing sectors.
Yeah, so you compare and contrast those two events, and I have a hard time really imagining how the Fed is going to be a big surprise one way or another. I think the language obviously is always important, but when you look at the summit with North Korea and Singapore, there's about 100 different surprises you can imagine out of that, probably most of them worse rather than better. And so, the market gets emotional. I'm probably more worried about the tone coming out of Singapore than I am coming out of the Fed.
So the risk is to the downside, Patrick, when it comes to this Singapore summit, when it comes to stocks and how they'll react?
Yeah, when you think about the range of outcomes in terms of things that could go really well, positive surprises, and it's hard to imagine a positive surprise that has a lot of permanence and certainty to it, but you can imagine things going really badly, or at least I can. And, I'm not saying a lot of this matters in the long run because the market tends to react in the short term, but I think value is really measured over a much longer period. So, in the near term, the way I look at it is potential outcomes, the range of possible outcomes. Singapore seems to be much more of a wild card, whereas the Fed seems much more predictable. And as that relates to the banks, I don't think there's really going to be a lot of surprise from the Fed. I think a lot of the bank stocks are cheap, but I really think the tone of the market is going to be what comes out of Singapore, what comes out of trade, what that means for the direction of the economy in the next couple of years.
Margie, as you look out over those next couple of years and extend your horizon, what would change your favorable view towards stocks? What should I be looking for as the moment or series of moments when I pull back from my rather more aggressive stance?
Yeah. Well, I think the U.S. economy looks absolutely terrific, has a lot of momentum. So if there was something to derail this rosy outlook, I think it would be something happening overseas, most likely in emerging markets. A lot of those countries are very, very over-levered if their economy slows down even a little bit. So I'd say that's where the risk is, and that may spill back to the developed markets.
So in emerging markets, I've used the term crisis advisedly, that's what you would point to?
Yeah, so just simply slowing down in growth that would affect the growth in the more developed countries.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.